We will get started. All right. Hello, everyone. Thank you for attending the next in our educational webinar series, Maxwell-Kates Presents Ask the Experts, Capital Project Planning for Co-ops and Condos. My name is Andy Marks. I'm SVP of New Business and Marketing at Maxwell-Kates. I'm going to be your host and moderator tonight. And joining us on the panel this evening, we have Drew Posner from Maxwell-Kates. He's SVP and Director of Client Services. He also leads MKI's project management team. And also from Maxwell-Kates, Mary Kate Bertone. She is a CPA and a senior member of our finance team, and she'll speak about the financial and budgeting aspects of capital planning, which I know everybody's eager to hear about. Also with us, we're very excited to have from FSI Architecture, Julie Georgopoulos. She's an architect and Lee Green associate. She's associate principal at FSI, and also joining us from FSI, Joseph Cosentino, who leads their mechanical engineering group. So an esteemed panel with us tonight, and we're going to be talking about, capital project planning, something we know that's on the minds of everybody, certainly all of our client boards. Quick housekeeping. This is a Zoom webinar format. For those of you familiar, you can see us, but we can't see you. So please use the chat function in the Zoom or the Q&A function. We'll be looking out for your questions throughout, and then we'll launch into answering those after I get everybody started with some initial questions, just to get the ball rolling. So without further ado, let's get into it. All right, first, everybody, let's just define our terms. What do we mean? And this may seem like we're starting at a rudimentary level, but I think we have to go there first. So what do we mean by capital improvement projects? What does that mean? Drew, maybe you can opine on that.
Yeah, well, what we mean basically is any major project that I'd like to say out of the ordinary, that's not part of your operating budget. So it's any type of improvement that you're doing on the building, such as, an elevator modernization, work on your facade, that's a local 11, hallway renovations, lobby renovations, any new machinery you put in your building, such as boilers or new HVAC or something like that. So that's kind of what we're talking about here.
Got it. Well, that's helpful. So we're talking about planning, which, begs the question, of course. You want to get involved in the planning of these types of projects proactively. No, I mean, this is not something that you want to respond to in the case of an emergency. I mean, this is a strategic approach, I think. And so can you talk a little bit about, what's that? First of all, the importance of being proactive in this endeavor. And this is for everybody, by the way. And also, what are the drivers of this? What are the things that creates the need for capital projects, and for, in the case of boards, having to go to the community to invest essentially in the upkeep of their buildings?
Well, that's an interesting question. Capital projects, they can be driven several different ways. It could be that there's a mandate from the city or from another government agency that it's something you have to do to the building, such as local law 11. There's also your elevators, or the best way to put it is age of the building, wear and tear. An elevator gets old, it needs to be modernized. Your hallways are looking tired. Again, or your lobby is looking tired, and your lobby is the basically your front window when you're looking to sell apartments. So I mean, all of these things are drivers that drive the need for capital projects. And you have to look down the road. What do we have to do? What is the tenure in the building, and what do the residents want? Sometimes the new hallways and the new lobbies come from that. People said, we'd like a better looking lobby, or we'd like better looking hallways. It helps, selling apartments in the building, and it also makes the building much nicer. So you have to look at that. How far out do we want to do this? We need to have the funds for it. How are we going to pay for it? Do we need to assess? Do we need to remortgage? Can we get a construction? These are lots of things that boards talk about, and those are the drivers.
Julie, Joe, you feel free to weigh in from either an architectural or mechanical engineering point of view. The mechanicals in the building, what are you looking for? I assume you do things like obsolescence planning for clients. What can you describe some of that and the reasons behind it and how comprehensive it is?
So if you want to go ahead, Joe.
Go ahead, you'll start, and then I'll jump in mechanically.
Well, so as Drew said, I think drivers are needs of the building, which are things that need to be taken care of, right? And then there's the wants, which could be an aesthetic upgrade. It could be building a roof terrace, extending your elevator to the roof to have this roof terrace, upgrading of amenities. And then, of course, you have mandates, right? So it's all of the requirements of the Department of Buildings, whether it be FISPs or garage inspections or energy compliance. But from our perspective, we kind of try and look at it holistically rather than on a case-by-case basis. So we try and do an initial inspection when we're approached for these kind of capital planning projects with buildings, and kind of look at everything. So like if we could look at the envelope, and we can look at mechanical systems, and we can look at obsolescence planning in terms of mechanical equipment, right? Is it more efficient to replace your boiler or replace your roof, or do it together and upgrade your insulation on your roof to increase your energy efficiency and offset costs on a more efficient boiler system? So it's always nice to be able to look at these systems together rather than individually, because then you might be able to find solutions that are saving you money down the line. And rather than being reactive to things breaking down and trying to do repairs that ultimately cost money, to try and be proactive and plan solutions that include and incorporate all the potential different agency needs and different building needs, right? So it's always about planning and trying to be prepared for the future. So that's kind of how we try and look at it.
Well, to that point, and I agree with you. I think having been on my own board and gone through this process, it's always good to look at things holistically, because all of the building systems, the building envelope, the exterior of the building facade, all of that is of a piece, right? It all kind of works together. And so from a, both energy efficiency standpoint, as well as Mary Kate, a financial standpoint, you're able to, if you look at things holistically and you take a kind of strategic approach, I assume you gain efficiencies from a cost perspective as well.
I think you gain efficiency from a cost perspective, as well as when you're funding, you don't have any surprises. We always recommend trying to do a very simple 5-year capital budget, just as you do a yearly operating budget. You can do a very simple capital budget template that goes out about 5 years. And basically it incorporates everything that Drew and Julie have really talked about, in that you put in there what must we do under state regulations, city regulations, and then you also you can put into there, okay, what do we want to do? That capital budget will also include where your funding is coming from, what your reserves will look like. And that way you can say, okay, well, we want to do the hallways, but we have to do the facade. and then say, okay, well, can we do the hallways in 2 years? What will our reserves look like? What are the capital needs of the facade? And then can we do the other one? You know, what would we have to do in order to implement what we want instead of just what we need?
Yeah, that makes sense. And 5 years you feel is the ideal, planning time horizon? Or
I think, yes, I think 5 years is good. It's also, I've seen outside auditors recommend a 5-year capital budget with templates. And what happens is people get nervous about, okay, how am I going to undertake a 5-year capital budget? But this budget is really just very simplistic to, as we said, what you need and what you want, based on something that Julie or Joseph would do on what's happening with your building, let's say in the next 5 years, or when they take a look at obsolescence planning, things like that. I think 5 years is good. 10 years gets a little unpredictable. I also think 5 years is good because it's the local law 11th program cycle. So
5 years.
right.
Joe,
Go ahead. So
Sorry.
certainly when we're doing these kind of capital plans for buildings, we kind of look first and foremost at the age of the property, right? So if it's an older building, we're also looking at that 1 year time frame, because there might be things that need to get taken care of immediately. So we always look at that immediate, what's that 1 year? Is it a life safety issue, something that needs to be taken care of right away, so that your 5-year plan is not going to be some exorbitant cost relative to like replacement of an elevator, where you could have done something sooner to kind of do preventative maintenance, right? So we always like to look at that short term. Sometimes we look at the 5, 10, 15 year. And when we're looking at the 15-year plan, we're also looking at these bigger ticket items. So it's mostly like roofing, definitely planning for the FISP inspections, basically any major building systems like chillers and things like that that are going to have to be looked at down the line. Because when you're looking at it 15 years down the line, it's a little bit more difficult to look at the minutia. You have to look at the bigger items. So
Joe, from a mechanical standpoint, there are so many facets, with local law 97 and all the various local laws that stem from those mandates, the energy efficiency and carbon reduction. I know that, our compliance team, Maxwell-Kates, Faith and her team are always, looking at that. And so, and that because of the 2050, kind of deadline, right? And then, but there are interim deadlines. Can you talk a little bit about the planning associated with the mechanical infrastructure? Obviously, Julie, it relates, as I said before, to the exterior, the facade.
Mm-hmm.
But can you talk a little bit about that? It's obviously you're not going to replace a boiler because you want a better looking boiler. You want it's got to be, performance driven, obviously.
Right. And, the wonderful thing about FSI is that we have architecture and engineering under one roof. And, we are constantly communicating, especially about these local laws that come up. And on the energy end, mechanically speaking, even though there is a 2050 deadline out there, as we continue to monitor, they have webinars also that, we follow, articles come up. The goalposts, they kind of have a sense of moving continuously. So, as we go through, we take that into consideration with our planning. And like you said, you're not going to replace a boiler because it looks nice. But as it comes up, depending on the building and the age of the equipment, we take that into consideration. Does this boiler have 5, 10, 20 years left in it? And then based on that, we try to project whether or not, if there's something better that we can replace it with, something more efficient. something that may not be, as a first cost goes, inexpensive. We've used that word, but it's something down the road that will require less maintenance or less utility to run. So we definitely have to look at that. We take all those types of information in, and there are, even now at this point, there are times where we recommend, hey, maybe it's time to look at a different source of energy. Your boilers kind of middle-aged. Let's start planning for something different. Or, we also have situations where we have boilers at the end of their life, and it's maybe not so reactive, so proactive. It's a little more reactive, and we say, okay, in this condition, let's put back what you have. That'll be good for the next 15 to 20 years, and then at that point, we'll assess whether or not it's time to change and go with something more efficient or a different route.
Yeah, and also, like you said, the goalposts are moving constantly, or there are new layers to the local laws which add additional complexity to making those decisions, right? The cost benefit of, if a boiler has a usable life, but I'm burning number 6 oil, that's probably not a good idea to keep that going the way it is. And then, do you rip the Band-Aid off, or do you kind of phase it out? So, it's complicated, right?
Right. There's a lot to take into consideration. If you have a boiler that's not that old, but you're spending a lot of money maintaining it every year, it's maybe that's time to rip off the Band-Aid as well, because you could get something newer that would take less money to maintain. So it's really, it's a fine juggling act to see what is the best route to go.
Right. So I guess we covered, actually, we already covered a lot of ground, which is great. But I just want to talk a little bit about Drew, and again, others, the board's involvement, all the stakeholders involved. Obviously, there's management, there's the board itself, there's licensed professionals like yourselves, there's the finance angle to it. But what are the challenges in terms of, obviously you're doing this analysis, and if you're a board that is concerned about these things as they should be, how do you communicate, first of all, what's involved in making those decisions, taking into account all these various variables, but then Drew, how do you communicate this to to the board, making sure that they're making the right decision, and B, to then the larger community that they're part of, where they may be asking people to reach into their pocket and make a big expenditure?
Well, first of all, I want to talk, if you're burning number 6, we got a big problem, but
That's
right. But anyway,
right.
no, look, I mean, there's, first of all, you have to, again, we're talking about different projects for different reasons. If it's something that's mandated that you have to do, you want to make sure that you have to do it. You have to do it in a certain amount of time, and we rely on our professionals for that. We rely on people like Joe and Julie to help us to and even our own compliance department and MKI, that this is the cycle is now for your FISP and local 11, and we communicate that to the board, and we show them this is time for us to do this. Then if you have to assess for it or whatever, then you have to go to the shareholders or the unit owners and explain to them. I mean, it's really all about transparency and explaining that these things have to be done. Now, for the other things, when we talk about the wants, is it going to improve the building? That's what we really talk about with boards. It's nice to have a roof deck. Okay, can we afford it? B, can we legally do it? I go through this a lot too, that you don't have elevator access all the way to the roof. And I explain that, well, now, as Julie had mentioned before, that you now have to extend the elevator up to the roof because for ADA regulations, obviously. So it, again, if you decide that the building wants to do something like this, the lobby, roof deck, hallways, again, it's explaining it to the residents, the unit owners and shareholders, why you're doing this, why you feel it's important, and how it's going to improve the building. Now, are you going to get pushback? Of course you're going to get pushback. You always get pushback. You're not going to make everybody happy 100% of the time. But the majority of the building, and I've gone through lots of hallway renovations and lobby renovations where you get a few shareholders and unit owners that are jumping up and down saying, I don't want to pay for this. But at the end of the day, it's going to improve the building, and the majority of the building wants to do this. So you're a unit owner or shareholder, you've got to pay your share. They're not happy about it, but they do it. I can count on one hand the amount of problems I've had with people really refusing to pay. And we're talking early on in my career where things like that happen. But, again, so, just making sure that you communicate, this is why we're doing it. This is what we're doing. And this is how it's going to unfold. And this is how it's going to happen. And this is how we're going to pay for it.
Speaking of paying, Mary Kate, for you, reserves. So you mentioned reserves before. What's a good rule of thumb in terms for your? Let's take a building that's 50 or 75 units. I mean, do you look at it that way? What's the proper level of reserve that an average co-op or condo building in New York City should have on hand as the normal course? And then obviously, if you're planning to do some big capital projects, what are the mechanisms for raising those funds and being able to pay for it?
So I think one of the things is that for reserves, you're going to hear, numbers thrown out, 3 months, 4 months. So I think what a standard basis to start at would be 3 months of your maintenance or common charges. And that would be, maybe a standard basis to start with. That being said, every building is unique. So you also have to take a look at, what projects have just been done and what projects you have coming up. That's where that capital budget comes into effect. And what happens is that you could maybe have 2 to 4 months reserves depending on what is going to be needed in the future. So if somebody's looking at your financials, you could have I would say anywhere from 2 to 4 months reserves. 2 months is on the a little towards the lower side, but if you've just done your your facade, and if you've just done your major ticket items, and that you do not have that coming up for the next let's say the next 5 years, or then you can plan to bring that reserves up. So if you're down to 2 at that point, but you do not have anything larger coming up, the plan would be to put in some mechanisms to slowly bring those reserves back up. Now, if you have an exterior project coming up, it may be in a year out, or even 2, and you really realize and you talk to professionals and say, we think this is going to cost you, $500,000. So I think the sooner you can start planning on that, so you don't deplete your reserves. I do have to say that, as far as what is looked at on the building's financials, and when people are buying into the building or they're trying to get underlying mortgages, they will look at whether you have a healthy reserve. And if you have projects coming up and that reserve balance is low, lower, especially than the 2 to 3 months, then they're going to ask, how do you plan to pay for these? How do you plan to cover the costs? And so, your options are, of course, as Drew mentioned, you can assess. You can, if you have a mortgage, you can take a look, see whether or not it's worth refinancing that mortgage, and then taking out additional funds. That being the case, there's many aspects of that you have to look into, including prepayment penalties and what the rates are now, what you expect them to be. And then the other options would be, if you have a line of credit, see whether you can tap into that line of credit. And then you can do a combination of those. Now, if you're a condo, you may be able to look into, there are some loans out there right now, but we had seen a lot less. It's a little harder for a condominium to get loans or proceeds that way. And again, you could do a combination of all of these. The other aspect of assessment and or loan is then if you do a loan, then you do have to put into your operating budget the interest that you're paying on the loan. So you'll have to take that into account. If you do an assessment, then you can assess how much money do you need up front. How much do I have to have right away? How long can I put this assessment over, so many months? When am I going to have to pay out these invoices on the project? So those are aspects of funding that you really clearly need to think about when you're doing this. I think you also need to know, boards need to know the makeup of their residents, the unit owners, the shareholders, being that if we were to assess right away and you have to assess, let's say, a very large assessment where you need the funds right up front, do they have access to get those funds to you? And then that's under consideration. Now, some boards will say that they prefer not to have as much in reserves, that they'd rather be assessed when it happens, but you have to know as a board the makeup of your unit owners and know whether or not that's feasible, not just for the board members, but for everybody.
Great. And I don't know, Julie, I know you've gone through the lead process and are involved in, and also Joe, in energy efficiency projects, obviously with all the mandates that exist. I don't know if you're familiar with, aware of some of the newer sources of funding from the state, in terms of, tax incentives. There's PACE funding and there's other types of funding that through NYSERDA and others. I don't know how much you can share insight on that, but there are those that where at least I've run into where if either it's a life safety issue or so you're improving that or you're improving energy efficiency, that there's some funding available if it fits into those two categories.
Yes, there are definitely benefits that could be, there are definitely state and federal benefits that could be gotten for example, like upgrading your lighting to LED. So like that's a really easy one that seems to be really common. A lot of buildings are doing that because and typically contractors are the ones that can file for those incentives as well. So they assist in the process. There's a little bit of that with solar panels, although in New York City, solar panels seem to be rather difficult to install because in a lot of cases, they're not that efficient. So there are these types of energy or renewable energy sources or ways to save energy. But
Yeah,
I mean, I guess, yeah, so sorry. I guess what we're seeing is a lot of these things are becoming more commonplace because the energy code is becoming more and more aggressive.
I think, Joe, I don't know if you had a comment on that as well.
I was just going to add that in the past, there have been some incentives and rebates for changing from oil to gas and going through, Con Ed, which we will discuss with the contractor when projects come up, depending on which route we choose. We'll see if there's anything available for in the building and their benefit.
Got it. Well, I think it's so it's 6:30. We have another half hour, and I think I'd like to open it up to audience questions. I have more questions, but I think I'd like to give the opportunity for people to ask. Hopefully you came prepared to ask questions. So if you could, in the chat, open that up and type your questions, we will take them. I'm going to give everybody a minute to formulate. and put that in. So as we're waiting for questions from the audience, I want to ask one more, which is Drew, directed at you.
Mhm.
You and I have on many occasions run into buildings that are, because I deal with new business, where they're mid-project. And because they're mid-project, they're a little reticent about making any changes because, they're concerned about upsetting the apple cart during that process, but they're also looking to replace management. Should people be concerned about that? I mean, is that something that is, how challenging is that? And, what's the, the chat is disabled. Thank you for that. I'm not sure why, but let's use the Q&A function then.
Yeah, that's what I was gonna say. So anyway, Andy, to answer your question, no, people should not be concerned about this. We take on buildings at Maxwell-Kates all the time that are in the middle of projects. Matter of fact, I'm doing one right now with one of my buildings that was in the middle of their local law 11 when I came in. It was seamless. 9 out of 10 times we know all the parties that are working on the project, so it's really not a big deal. I've had other buildings where I've stepped in and they're in the middle of a hallway renovation or a lobby renovation or an elevator mod. Look, some boards are, hey, we want to wait, but my advice, and Andy, you and I have spoken to a lot of boards about this, is if you're unhappy with management, the current management you have, do you really trust him to finish this project or to even start the project? So no, it's not a big deal.
All right, thanks. We have a couple of questions. So Ken Jablin asks, if you need money for a project and your underlying mortgage is not very large versus the value of your building, why would you do an assessment rather than borrowing from a line of credit?
You want to answer that, Mary Kate? Go ahead.
Either one of us could take that.
Yeah.
But I think that you would consider your line of credit. The two things you have to consider with your line of credit is just what the interest rate is at the point that you're going to take the money out from the line of credit, and how that then affects your operating budget, because the interest that you pay will be reflected in the operating budget. But line of credit is always a good option if you don't want to assess the shareholders, then it is always a good option to look into, especially if your debt ratio is low.
Got it. Drew, anything to add, or anybody?
No, I think Mary Kate nailed it there.
Okay, great. So Jean Pye, we had some issues with a roof deck and insurance didn't pay the entire cost of the repair. What's your experience with insurance coverage in these situations?
Why don't I take that one, Andy? Look, as I tell my boards, when there's insurance claim and you're dealing with an adjuster, remember their job is to not pay you. Okay, that's the whole thing, and they're looking not to pay you. So we argue, we push, we have a relationship with our brokers at Maxwell-Kates where we can try to get them to go back and try to get more money on the claim. However, you have to understand that there are, sometimes items on the roof or whatever the situation is that are not covered by your insurance. That is, specific, to every issue. But, and there are other times where I'll go out and I'll get a public adjuster because they get paid on how much money they get you. So, again, that's for large scale issues. I don't recommend that for something small, but, these are some things that we do. Great.
And I will say, having been in the insurance business in my life, long time ago, so in many ways I've come full circle. That's a whole nother story. But my experience is that depending on the carrier, there are those that are more generous from a claims perspective based on how they approach, paying claims. If it's, I won't mention names, but there are definitely some carriers that are more liberal with paying claims, regardless of what the cause is. You're going to pay more for that in terms of premium, but there are those. Any other questions from the audience? Those two were great. Thank you for those, Ken and Jean. Are there any others? Like I said, hopefully you came equipped with your questions because we've got amazing experts here to ask. Okay, anonymous attendee. So that Julie, you referred to solar panels not necessarily being efficient in New York City. Could you expand on why solar panels are not efficient?
So it's not necessarily that they're not efficient. They're, in most cases, solar manufacturers are trying to maximize the efficiency of the solar panels installed. And so typically footprints in New York City for the installation of solar panels are rather small. And if you're looking to install, say, a few solar panels on your roof, that's going to feed a base building system. It may not be as effective as some other sort of maybe insulating or changing to LEDs or something like that. But the other thing is that a lot of solar companies do solar studies. So if you're a low building and you're surrounded by tall buildings, you might not be as efficient. So they'll do that solar study before they give you or even consider providing you with a solar panel package. So that's the first step typically. But for small buildings, if you're a tall building, obviously, that might be a different consideration.
Right. So it comes down to how tall your building is, how wide open the area around your building might be, the square footage of the roof space to be able to deploy more panels, I suppose.
Yeah, and as we all know, every square inch is valuable. So a lot of owners typically prefer to utilize that for common space instead of covering their roofs and solar panels. So, or amenity spaces. And
I would imagine that the efficiency gains from a energy usage standpoint or contribution to your overall energy usage is there's that cost benefit of having the use versus how much you're really going to gain from.
Right, and that's an analysis that's typically done by the solar panel manufacturers, so that way owners can make educated decisions.
Yeah, and then they do that at their cost generally.
Typically, they'll do a study, like a quick study in the beginning. I don't think they charge a fee for that.
Right. Thank you. Anybody else with questions? Thank you, Mr. or Miss Anonymous. Who else has questions? I'll ask another question while I'm waiting. So for Joe and for Julie, how engaged are you in, I've seen situations, for example, where an engineer will, for a large construction job, will be, project managing it. Like where they're playing much more of that kind of role, where we have Drew, obviously, in his role here at Maxwell-Kates, but first of all, how involved should board members be? And so this is for everybody, how involved should they be? Should they be sitting in construction meetings every week? Or is that not a great use of a board member's time, given that, they're hiring you as the professionals? What's that cadence of communication and level of involvement that's optimum to get one of these projects from, conception to completion?
I think it depends, right? Every building is different. It depends on the building. It depends on the size of the building. It depends on the project. It depends on the board members. We have some projects where they're board members or residents who are construction professionals, and they are very interested in participating in these sorts of projects. Typically, like if we have say, for example, a building envelope job, we'll have a weekly meeting where it'll be us with the contractor discussing progress of work, and we leave that open to board members who want to participate and listen in. We always issue a field report, and that gets distributed to the board and maybe the residents, depending on the protocols of the building. So, so that's more of how we handle a larger project. But I guess it depends on the board's interest and want to be involved in these projects.
So because again, as a board member, you could either be in the way or you can, really enable the professionals to get it done, right? And I'm sure there's gradations in between. Drew, I don't know if you have a perspective on this, because this is, your role is dealing with the boards and guiding them through the process. What's your take?
Well, my take is, the board should be involved as they want to. I have some boards where they, where we have a committee that's involved with the project from beginning to end. We have other boards that, tell management just go take care of it and report back to us. So, then we work with the professionals. We get the reports, we'll have meetings, and as Julie said, that, yeah, we have, pretty, we meet pretty often with the professionals and the contractors to understand what's going on. So, it really depends on every building and how they operate.
Mechanically speaking, sometimes the projects are smaller. Sometimes there are some lead times for equipment that we're waiting for. So we'll tailor our involvement as needed so that we're not there just because it's the next week. We'll work with Drew and make sure that we're on site to begin with, and then depending on the complexity, like everyone has said, we'll be there as much or as little as needed, depending on where we're at in the project. Sometimes as we get further along, or if something is a little bit more complex, we'll be there more often. It doesn't have to be just once a week. It doesn't have to be every other week. Sometimes there have been complexities where I'll see you tomorrow. We're going to come back and make sure this is hashed out correctly. So we'll do whatever we need to do in order to service the client as best as possible.
Great. I do have another question from Richard Carlson. Thank you, Richard. Are there any credits or funding programs available for replacing an existing boiler with a new, more efficient one, even though the energy source remains fossil fuel?
Sometimes Con Ed will give rebates, even though you're going from gas to gas. And that's something that we check on. Occasionally, size of equipment and how much gas it uses initially becomes part of the equation. So we'll have to take a look at that on a case-by-case basis. Gotcha.
And I know that Con Ed, having installed smart meters now and deployed those across most buildings that we work with, there are now opportunities to leverage the data that those provide to help better regulate energy usage. And in some instances, if you're highly efficient, it's possible that they might give you, you might actually generate revenue in a sense. So it does increasingly pay to be as efficient as you can be in your energy usage. They're really trying to encourage that. And we Drew, I don't know if this is something you could speak a little bit to, that our compliance team has taken to the next level, which is working with a partner company to leverage the data and create and train our building supers, resident managers on this system, so that they can be more in control of that process.
Yeah, I mean, that's something that we're always looking at. What can we do? What you're talking about, Andy, I think is a BMS system where the super can actually, or resident manager can actually control on computer, the energy output that's going on, things like that. And look, I have seen incentives in the past on things like this. I can't speak about now, but this is something that compliance does work with outside agencies and brings to us that we can bring to our clients.
Yeah, I think there's it's the demand response aggregation program that we're instituting. So we'll have more to share on that down the line. Round 2 of our webinar series on capital improvements. Anybody else with questions? We have about just a little under 15 minutes left. Any other questions? Julie, Joe, while we're waiting for more questions regarding, compliance and filings and the Department of Buildings, can you talk a little bit about that, Julie? I'm sure you're more on the front lines of the DOB and filings. You probably have expediters that you work with or that are in your company that are, dealing with the permitting. If it's a landmark building, you're dealing with landmarks in addition to DOB. Can you talk a little bit about those complexities and how that adds, adds cost, adds time, because you got to get approvals on pretty much everything you do.
Yeah, so we have expediters, as you mentioned, to work with us. Typically, when we start a project, understanding what the scope of work is, then we evaluate the property and determine, is it a landmark building? Does it have to go to DOB? Does it have to go to HPD, FDNY, DEP? So we have to look at each component and see what scope of work, what the scope of work entails and what it involves, and prepare the proper documents and ultimately get the appropriate permitting, and making sure that the contractor is qualified and capable to handle all the components of the work. So we basically deal with the entire process from filing from beginning to end, obtaining permitting, coordinating with the contractors, coordinating their tenant protection plans, making sure they have any site safety plans, any special inspections, and then throughout the process, we document anything that requires a special inspection, prepare those filings, and ultimately do the sign-offs at the end of the project, so final inspections and closeouts. So we handle the filing process from beginning to end for all of our projects.
Got it. And you mentioned vendors, and obviously there's so many different trades involved in these projects. And maybe Drew, you could weigh in as well, or anybody for that matter. Talk about the importance of bidding. You mentioned qualifications initially. Obviously, you want reputable firms that know what they're doing, that have the proper licenses, depending on what it is. You talk a little bit about that process and how we go about the bidding process.
So typically we'll put together a scope of work. So we take a step back. We evaluate the property, we determine what the scope of work is, put the documents together, and then discuss the proposed scope of work with the client. From that point on, we file the documents. And while we're filing the documents and kind of waiting for all these approvals from all these different agencies, we also issue the packages out to bid. So we try and do that process simultaneously and obtain the pricing from the contractors while we're getting permits. So at that point, let's say we bid it to 3 to 5 contractors, we can level the bids, review the prices with the owners, pick the contractor that is best suited for the project. And by that time, we hope that aligns with the approvals. So once the permits are ready for pulling, the contractor has been selected, has a contract in place, and can obtain the permits. So we try and overlap that process to make it go a little bit more quickly. And then once the contractor obtained the permits, we kind of pass the baton off to him, and he then goes into work mode. But we work with the contractor, again, as mentioned before, on a weekly basis, depending on the scope of work, to review, to make sure that the work is being executed per our documents.
And so,
go ahead.
now I was gonna say, and then speaking of contractors, we do have ones that we work with that we make sure are responsive to both us and the client as well. And we're constantly honing that list, making sure that we have a fresh list of people who are ready to go, ready to work, and they do quality product. So.
Drew, anything to add to that, or
Look, again, I go back to, we rely on our professionals. I've worked with both Julie and Joe, and we always talk about what contractors we're going to use. There are some that I have experience with that I may have used with a different architect or engineer that I like to use, but, we have to look at the job and what their qualifications are and past experience. Every once in a while we'll get a new contractor, but we fully vet them, by checking their references, talking to other managers that have dealt with them as well. But it's a process like anything else.
Yeah. One thing we talked about reserves earlier in our proceedings here, and there are firms that do reserve studies. How important is it to do again, we're talking about, planning, and again, any good board is thinking about things in advance and planning for them. But there are a lot of questions in general about reserve studies and what's involved in that and how important that is. We talked about the benchmark of, between 2 and 4 months as a benchmark reserve level. What's involved in a reserve study, and is it something that should be done, and how often?
Well, can I start with this?
Yeah.
First of all, every time a board brings up reserve study to me, I tell them, let's not do this. The reason for that is because now it becomes part of your financials. It becomes part of your audit. So when somebody's coming to buy an apartment in the building, they're looking at a reserve study of projects that you think you're going to have to do down the road, 5 years, 10 years, whatever. And now the question comes at this point, how are we going to pay for it? Or is the building not in great shape because you have to do these things? What I like to do is we'll do something similar that is not public with the board, and we'll discuss, the 5-year, 10-year planning. What do we think we need to do down the road?
I just want to add to that. So there's a little bit of a difference between a reserve study and a capital budget.
Yes.
A reserve study is when the building goes out and hires an architect or engineering firm to do what Julie had mentioned, where they do obsolescence planning and when are your mechanics gonna go, and they take it out and do this study, and then they make suggestions that say, okay, you should, in order to pay for this 5 years, you should be putting away this amount of money. So to Drew's point about the reserve study, even if a reserve study is done, the majority of, if not all, of the auditors, and I think even, I don't want to say 100%, but of the attorneys will tell you not to have it in your audited financial statements as required. It brings on an additional level of liability to the corporation if that study is done and somebody's relying on it when they go into purchase and they say, okay, your boiler, you said it was going to last 10 years and it only lasted 5. Now you're assessing me to do a boiler and I relied on the study, even though it said that, it's not absolute, there's still reliance on that. So that's the difference between doing a reserve study and, like I said, recommended more of a capital budget.
Got it.
Right.
Capital budget planning.
Right. So reserve studies came into effect a little bit more with the underlining amounts that the mortgage companies were asking from condominiums in order to do underlining mortgages from Fannie Mae. And they were coming in, but there's other options to doing a reserve study.
Wonderful. Got it. That's helpful. All right. Well, it is 4 minutes to the hour. Happily, I am going to stop it there. And I thank you all for fabulous discussion. If anybody is interested, we will be posting, and board members, feel free to share the link that we'll be posting on YouTube as well as at maxwellkates.com in the coming days. We'll have this available for somebody to view who wasn't able to attend. But I am happily going to give you back 4 minutes of your evening. Thank you all again, and until next time.
Take care, everybody. Thank you.
Take care. Have a good
Bye.
evening.
Thank you.
Bye-bye.